Hi there, welcome Back Into Charge, the podcast by Develop. My name is Louisa and my co-host here is Maria Christina.
Hello. So this week we spoke to Nick Suhr, the CEO and co-founder of Kasko. Kasko are the guys supercharging innovation in the insurance industry. They offer an API-powered product platform to insurance companies looking to act like startups.
Nick has a background in traditional car insurance and now he's working at the innovation forefront of the industry. We wanted to know about the journey that took him to creating Kasko and the challenges involved in dragging the insurance industry out of the 19th century.
So, without further ado, here's the interview. Nick, thank you so much for joining us.
Thanks for having me.
Can you tell us about what Kasko does?
Yes. So we are in this space what people call insurtech. Our customers are insurance companies, and we help them use technology to create digital products. So imagine you are a product manager in an insurance company and you wanted to create a new product. Now the problem that kind of goes into, you need to find a distribution angle, you need to find a pricing, so all these little questions that you type in and then feed back a price. You need to get some wordings or the fine print, and that is absolutely fine. But at that stage, you then need to put it onto the IT platform. And insurance companies, if you have a new IT, that program is probably 10 years old. So some of them are more like 20 years old. So they're working relentlessly to update their systems. So new products don't make the cut most of the times, unless they are super safe. You know, you can write millions of premium, but most of the times when you start out, you don't really know that. So that's where we come in. We've built a platform that allows every interaction when you buy an insurance product from a customer perspective, the front end, typing in the questions, the calculation, payment, getting the PDF that you hopefully never have to look at. We'll create that on our platform, and that sits outside of the IT. And then we find ways to back integrate it so we can enable a product development process that normally takes 12 to 18 months and cut that down to 4 weeks. And then we can also do cool stuff. So people talk about chatbots, AI, some data scraping, and all this stuff is really, really cool, but you need to apply it to the insurance product and need to back integrate it into their core system. So we sit as a middleware in between and just think about day in, day out with insurance companies, how we can create new products, how we can create value to their customers.
So you're very customer driven, really. You
Absolutely.
Believe in.
So I think there's two customers, right? There's the consumer, which is either a person or a business, and there is the customer who's paying us, which is the insurance company. I think what we add to the table, aside from a cool tech platform and knowing how to implement things a little bit quicker, a little bit more pragmatic than some other people. We start, when someone starts with an insurance product, we kind of go, okay, so where's the customer going to get that product? How's that experience going to look? Do they want to answer 40 questions? Can we somehow cut this down? And that is something that over the past 2.5 years I've had hundreds of discussions either on the insurance side or on digital channels, marketplaces, booking platforms. And that is what we bring to the table to kind of look at it from an end consumer perspective. Because if you're sitting in a large insurance company, don't talk to the end consumer. You talk to brokers. You actually don't know your customer. And if you don't talk to them, if you don't get the chance, you don't really get the opportunity to validate your hypotheses. So that's where we kind of add value.
It's widely agreed that the insurance industry really does need updating, and this is what you guys in InsurTech are doing. But
absolutely. But I also, yes, it is just not, let's say, timely to wait weeks to get a quote, then paper mail. However, I think one thing to appreciate, when was the last time you dealt with insurance?
I went on a big trip a while ago, so I got some travel insurance.
So let's say once in the last 12 months?
Oh yeah, absolutely.
And that is true for most people. And what that means is it's a low-touch product. So when people talk about, let's say, we look at Uber or we look at share economy, we look at fintech, which are kind of high transaction, or like there's a positive emotional association with that. And then we now need to apply this technology to a very low touch business. I think it still remains to be seen how much impact technology will have to overcome customer inertia. Because ideally you don't deal with insurance. That's the beauty. And also the challenge with insurance, you want to be protected, but you just don't want to deal with it. And that is very much our view, why we apply the technology with the insurance partners, but we also are a little bit conservative about the actual impact in terms of now customers are flocking towards us because we have an app. Mm-hmm. No one needs an insurance app. But it's still very interesting, and it's a massive multi-trillion-dollar business. Everyone needs it. Sometimes missold, it's misunderstood, and there's changing customer behavior in terms of how they want to interact, the kind of data that you leave behind through interacting with different services. So I think there's a massive opportunity, but there's no silver bullet either.
Mm-hmm. So when you say, you said you launched Kasko in 2015, so this is sort of the beginning of what we call InsurTech now. Mm-hmm. Where did you see the opportunity? How did you talk to people? Was it because of your experience in the field? How did you come to the conclusion that was something that needed to be dealt with?
Matt and I started working on some little projects in 2014. Very much to kind of test whether being good friends is one thing, starting a business together is another. So we said, let's give this a trial run, because both of us enjoyed consulting. And then at the end of 2014, we were like, okay, so we've got a lot of experience. These projects don't make any money. So what do we do? And I said, you know what? I think there's a lot to be said about insurance. I know the space. And our first product actually was something very different. We called it Kasko Drive, and it was short-term car insurance through an app. And so we started doing that. We quit our jobs. Matt moved to Hamburg. And 2 months in, we realized this is not going to work. I remember one call with a large insurance company, and they said, Mr. Suhr, this sounds interesting. So how are you going to get your customer? I'm like, in hindsight, it's so idiotic. But we were like, wouldn't it be great if you had this application and then use it when people rent their cars to different friends? But we never really thought it all the way through before quitting our jobs. On how we're actually going to get users. So we canned that. We switched it around a little bit and said, okay, now why don't we offer insurance products, other websites, like travel insurance or gadget insurance, but for where people buy and sell cars, rent flats, so all these touch points. And we did that until the end of last year, and we've got some traction on it, but we totally underestimated the sales cycle. It just takes really long trying to get together large corporations. And then actually some of our insurance partners turned around and said, so this was really easy, building these products with you to sell on other people's website. Can we also put that on our website? That's boring, but okay. And they actually paid us for it. So then, so we kind of, I guess we took our lessons. We also followed the money, because at the end of the day, we're 8 people now. We need to pay salaries, and that ever since then, that really kicked off, and we're co-creating cool products with our insurance partners. Yep, that's the story.
You mentioned that you were struggling to get the customer in the first place.
Yep.
Earlier, we were talking about how insurance is a low-touch product.
Yep.
What are the challenges around innovating in insurance and reluctance of customers to deal with it at all?
So I think the most critical point is to able to find the time and the space where customer is thinking about insurance. When you start traveling, which is why you put travel insurance when you book an airplane ticket, so that's a good trigger. There are other triggers, when you start university, when you start your job, there's certain life events or purchase events that might trigger an insurance need. And the insurance company is always very far in the back, which is why probably 80-90%, depending by market, is sold through agents who directly sell to you. Let's sit down, let's talk about insurance. So I think the crucial part is getting that touch point right, that timing right. I think the second thing is then to appreciate that people I think there's increasing number of self-service. So before I want to talk to someone, I kind of want to dabble a little bit around and see where's the price range. I don't want to be sold to, I want to find things out. So you need to have real-time feedback just a digital product, not a paper-based fax. And then I think the other thing is how can you utilize new data sets in order to better identify customer need, customer risk. I think those are the three main challenges, but I think the main thing is to get to the customer when they actually want to do it, and this is at a live event or some opportunistic driven purchase event such as travel insurance.
We touched on customer data. With innovation in the insurance space comes more customer data and a more in-depth understanding of people's profiles and the risks. But I wonder if you could comment on social inequality and pricing around insurance, and as that gets more refined, the challenges that we're going to be facing in that sector.
Absolutely. So in insurance terminology, it's called redlining. And let's just say an insurance company, a health insurer doesn't want to insure a sick person. That's just how the model works. And I think there is an argument to be made. The closer you become to a segment of one, the less you move away from the traditional insurance model, which was going to say, we're all in a little village, we have 20 houses, so let's pool some money. If one house burns down, we can take that cash, we can rebuild the house to insure against large-scale catastrophic events. For example, in Europe, you cannot discriminate against gender. So let's take car insurance. Basically, women are better risk than men. Men don't like to hear it, but you look at the statistics, women just drive more safely. Now, a couple of years ago, you would thus get a cheaper insurance quote. Now, the regulator said, this is not going to work, we cannot do this. So what they did, you're now just getting the same quotes that we do. That's basically what they did. So I think there is a social contract, a regulatory contract, whereby we as a society need to define how we want to deal with that. Another thing, and this is actually some of the challenges when you start to apply artificial intelligence, machine learning, crunch a whole lot of data, I can guarantee you they will discriminate. Because that's what the data says. If you're sick, you're worse risk. That is what the AI will find out. Probably if you have on the socioeconomic spectrum, probably if you're really well off, you're better risk than if you're really bad. But these are things that the regulator looks at. An insurance company needs to tell how an insurance product is being priced. But if you limit AI and the machine learning capabilities to say, take all these factors, but you cannot discriminate against gender, race, upbringing, etc., you reduce the insight of it, because then you're basically back to actuarial models, and time will tell how that's going to pan out. But it can be a really big issue, because then you're not going to provide insurance to those people who need it most. Because in the end, insurance is a very social endeavor. We all pool money, so if something bad happens to some of us, that's where the money goes.
AI and chatbots, that's in the future for you at
it might be.
Kasko?
So chatbots would be one thing whereby, and we had this, so one of our insurance partners reached out to us and said, we want to do chatbots. I was like, okay, so what do you want to use them for? There's basically 4 uses. You can kind of do an FAQ type where you ask questions and they feedback some questions. You can buy a product, you can change your policy, or you can put in a claim. And there's different back-end processes involved and complexity. So we consider a chatbot a digital touchpoint, very much the same as an email, a banking platform, a travel website. And we wouldn't build a chatbot ourselves, but we would partner with a chatbot insurtech. And together we can create an experience where they have a really slick chatbot functionality, and we power the insurance product, everything else that goes into buying an insurance, churning out an API that the chatbot can touch or interact with, without the chatbot provider or the insurance companies trying to make those two systems connect, because that's not going to work. So we're like a little bit, where we kind of see ourselves is a little bit, for the lack of a better word, like an app store for insurance companies, where you can plug in, cool technologies, cool services outside of your legacy IT systems to rapidly innovate and try new stuff.
So was partnerships with other startups and other smaller companies the best way you found to sort of disrupt the insurance sector? Because I'm assuming that your agility and an insurance company's speed are slightly different.
It is, but there's also we're very focused. So whenever you do have a lot of stuff going on, if you have to do 20 things, then these things, you have to divide your time amongst 20 things. If you just do one thing, you're going to be more quicker. So I like the idea of adding best-in-class services and some form of microservice architecture rather than trying to build everything yourself. So we provide payment. We enable payments, but we don't transact the payments ourselves. We issue emails, but we use an email provider to build that functionality. So we believe that if you have a best-in-class offering, it can be 2 companies, 3 companies, 8 companies, that together are better at fulfilling certain parts of the value chain, then I think that's a really powerful approach. Because it also is better for the insurance company, because if you go to SAP or Oracle, we can do everything, but then you get just this monolithic block and no one can do everything the best. It's just not going to work. And we just kind of you can take this, it's more like a cafe menu type thing.
Yeah, pick and mix.
Exactly. So I think we are in discussions about this, about the chatbot thing. We've actually, one of our recent projects in Switzerland was where the insurer got us together with a photo recognition startup, Snapshot, really cool guys. And they provided, so you can take a photo of a watch and then buy insurance around it, and it recognizes the watch, the value, etc. And we built the product around it, and they provided the really cool AI machine, whatever they do in the black box. And that works, and that together created a better experience, a better product for the insurance customer, and otherwise none of us would have been able to get that deal. So together we had a better offering than alone, and I think that's the way forward.
Right, so you don't only provide the middleware, you also provide the middle. You're sort of also the middlemen.
Yeah, and we do. There's a lot of project management involved, and we consider ourselves a little bit like a digital lab on steroids for the insurance company. So they come, what's cool, what's new, we want to do new products, what do you think? There's a lot of consulting, advice, sharing experiences in setting something up, because if you just do what you're now doing in an analog manner and think you're now putting it in code, that's not going to work. You need to be aware of new technology trends, new stuff that's coming out, and if that's your day-to-day, then we just have a pretty good overview of what's happening in the space and how it applies to insurance.
I mean, I think from an insurtech point of view, we can now trace what the priorities are on your side.
Mm-hmm.
But since you've been on both sides of the table, what are the big companies looking for, specific issues that they're trying to solve?
So I think there's the umbrella term digital transformation.
Mm-hmm.
And at the core of it is reworking their 10, 20-year-old systems, replacing migration, and they are allocating millions and millions into this. There's certain parts of the value chain that insurtechs could start to nibble, but these are massive programs. So I don't think that at the core, it'll be a very big chunk to try to bite off. But conversely, you have changing consumer behavior, changing opportunities. So you have these speedboats where insurance companies need to figure out how to update their business model, their value proposition, rather than just reducing cost. And what we see, that is something that is very important to insurance companies. But at the end, it comes down to a very simple thing. They want to write more premium or more customers at a lower cost.
Do you think it's possible for these companies to actually innovate from within without people like you and Kasko and other?
I think so. Yes, I think. I mean, to me, innovation. The definition of innovation is if it's new to you, then it's innovative for you. That's there's not this eureka moment. You don't need to reinvent the wheel, because that just would be then you're not going to get started. I do think that insurance companies, they do innovate. We might not see it, but they do it on the inside. But it's the, as it was well put in the book, Innovator's Dilemma, the problem that you have when you follow your customers and you have certain KPIs, ROIs, then it's very difficult to get through the decision-making process of trying something new because the business case is uncertain. So I do think that you should always partner with someone if you think that they have something to add to the mix. And I think startups do have something to add to the mix. They have a different technology angle, but also they have a different speed of working. If you do that together with insurance companies, that is one measure to shift culture. So I would say, yes, they can innovate. Yes, they should invest. Yes, they should partner. I think there's no silver bullet, but I think you need to try different measures like a portfolio, and then you double down on what works, because at the end of the day it depends on the people working together. That's what a lot of people always forget. It's not just like a large organization and a small organization. It really depends. It's Peter and Nick, Maria and Lisa. That is what creates value.
And how have you found culture differences and similarities between you, a small agile company, and larger insurance providers?
I think there's two things. We have a need for speed, because if I need to wait for 3 months for something, I have 3 months less run rate. and that kind of need to deliver, to put something to market is certainly different, and our decision cycles are a lot smaller. If we decide something fundamental about the business, Matt and I pre-discuss it. We then go on a call with the team. We spar it with the team. That's it. There's not there's a board meeting in 6 weeks and we need to prepare it and 20 people need to discuss this. There's less politics.
And the decision makers that you do deal with, are they on the whole open to digital innovation, or are you finding some people not understand what you're talking about?
I think, as with any larger organization, there's always a faction wanting to protect the status quo because that is what got them there, and some people who challenge the status quo. I would say in insurance, the challenges are gaining increasing momentum. It's also an age thing. If you're 62, 3 years to your pension, you're not really going to reinvent the wheel. Also, your personal experience of 40 years proved that this is how it works. So why would you now forget all that success and have, some youngster who's just has some idea but no track record to kind of tell you how it's being done? But I do think that it's what we find the zeitgeist is different. Whilst 3-4 years ago, you would have to really convince your peers in the insurance company to say, how can you work with this startup? How many references do they have? Do we even know whether they exist in 1 year's time? To why are we not working with insurtechs? Why are we not doing that? So these guys approached you 18 months ago, and now they're doing all this crazy stuff with our competitor. So who said no to them? So whether that leads to a project, very different, but there is a willingness to talk, a willingness to pilot, and you increasingly overcome this not invented here phenomenon. But I think at the end of the day, it's as any working organization, you have people who want to protect the status quo and people who want to challenge it, and for, quite frankly, very personal reasons. Someone's already made a career, they want to protect that. Someone needs to make a career, they need to find something new.
Well, since we've talked about how insurance was and what it's becoming, what do you think the future looks like? Is there any particular industry that will change in different ways? I mean, will travel be different to cars?
Okay, so like the macro trends. So I think, one thing that is, I don't know when, but blatantly on the horizon is autonomous driving, and that will have a huge impact on insurance as well. I think the level of the interaction, kind of things like Alexa, Siri, so voice interaction. But in terms of insurance, I think the macro trend towards it is it will accompany you, but you don't really have to do all the decision making. So there'll be a lot more technology nudging about saying, you're at the airport and someone would ask, you already have your travel insurance product, and they would say, by the way, do you now want to activate that? And it'll be more tailored to your actual behavior, your life cycle, without you having to actively think about it, and to make sure that you get the right insurance in the right place at the right time. I think it's going to be the macro trend, and I find it really exciting to hopefully, shape that journey somewhat, because none of us know. We're making it up as we go along, and that's the exciting part.
You just touched upon something that I find really interesting, this idea of providing a service without really providing it, like without really you realizing that it's being provided. What steps are happening right now to make that possible? You were talking about data earlier, like how that's...
Okay, so let's take a very simple example, your bank. Basically, your bank, your credit card provider, soon Google as well, they're doing your spending, your bank account tells me a very good story about you. Much more than I would argue than your Facebook likes, because that's really hard data when you come from, especially from an insurance perspective, rather than serving marketing ads. So if you take that and there's new regulation coming into place, PSD2, where banks need to open up their treasure trove to everyone. And if I have, with your consent, can analyze that data and I can make recommendations on what you should buy, what you shouldn't buy. On an insurance setting, I know things like income, where you're traveling, what you're buying. I can basically deduct what your household looks like, so I can assign a coverage which is probably a bit more acute than square feet times X, which is currently how it's being calculated, because they just assume we all have the same stuff in our flat, which I don't think is true. So I think that is one particular example of where you can already go today. All the technology is there, all the pieces are there. You just need to piece it together and really figure out how to fine-tune it. And you're already 80% there. And then you can enrich that with, I don't know, location-based data from your phone, your social media profiles. I mean, some guys, digital fine print, they're really cool. They've done this thing where you log in with Facebook, you take a photo, and then they give you a life insurance quote. But you can see how that could impact. But I would personally, and we are trying to get into that space, really bank on banking play. And if it means to you that you get relevant recommendations, and the recommendations also should be what not to insure. Probably, I mean, I have it because I'm a bit of a tutz, but you shouldn't buy mobile phone insurance. It's not, it's not really what you should do. You should buy disability insurance. That is what, cover your critical risks first. But not everyone wants to do that. Not everyone wants to open up the data to the insurance companies. But I would just say they know everything about you by association anyway. I mean, they have centuries of data about you, which is why they can do all these actuarial models. But yeah, I think that's where this is heading, and I think we'll see a lot of improvements over the next 2-3 years.
And I mean, this is sort of outside the scope, but I mean, you're based in Hamburg, your company's here. How do you think Brexit will affect your business?
First of all, I was negatively surprised about Brexit. I think I get it. I also don't think that the world is going to end, but from a kind of European continental perspective, it was just not understandable. I think from a business point of view, it's either not going to change anything, or it's going to have actually a very interesting opportunity for us, because if you go hard Brexit and the EU is going to hardball the UK, then the UK needs to do some stuff to keep attracting people. So we're going to probably become some form of tax haven. As a technology company with subsidiaries in mainland Europe, we can kind of move around quite quickly. So it could even be an upside for us. And just from a personal note, I really prefer coming to London with that exchange rate right now. It's I just get a little bit more for my euro. But yeah, I think people don't really know. I think it can swing any which way. It's a complex problem. As a startup, we'll just pack up and go someplace else. I don't think that's the big issue. For large financial institutions with passporting, a little bit different. But yeah, I think it remains to be seen.
Oh, I can't wait. It's going to be so much fun.
Yeah. I think the problem is really that you're now 3 years in a deadlock, and you already see, because large companies don't really know where the chips will fall, they will stop investment. So that uncertainty in itself is, I believe, having a significant negative impact on the UK economy and everyone in it. Yeah. Other than lawyers. Lawyers, I think, do fine these days.
Well, thank you so much for joining us.
Thank you very much.
That was incredibly interesting, and best of luck with Kasko.
Thank you very much.
Thank you.
And that's all we have for this week.
Thanks for joining us, and remember to subscribe for more. Next week, we'll be speaking to Kush Patel from Tallysticks, who are using blockchain technology for supply chain finance.
If you can't wait until then, you will have heard Nick mention that Digital Fineprint are doing some cool things with social media data and insurance. We actually interviewed Eric, the CEO and founder of Digital Fineprint, in Charge Episode 3. Check out and subscribe to our page on iTunes, SoundCloud or Stitcher. We have 11 episodes out.
Of course, we welcome you to get in touch with us with questions or a proposal topic for interviews at charge@develop.co.uk. Our Twitter is @develop_team, And our hashtag is ChargePodcast.
Catch you next time.